Morning everyone, Rick here with HUN Candlesticks, and I've got another video blog for you. Today is Thursday, October 22nd, 2020. I want to welcome you here, and I want to really shout out, great big thank you for everybody watching my videos. Thank you so much for the thumbs up, and thank you for the comments that you posted in there. In fact, I would just urge you, if you have questions about a chart, post them in this video here today, and I'll see what I can do about getting them answered for you. I may answer them back in text, and I actually may create another video today and send out to you. So again, thank you very much for all your support with YouTube, also Twitter and Facebook. Thanks again. Okay, so yesterday, for the last few days, the SPY has just not been too happy. And the reality is there is just so much the SPY is trying to chew through with the stimulus, with COVID, with the election, that it's just hard for the SPY to get going. It's hard. What it is buyers, traders, investors, they just don't want to put their money out there right now because they're a little bit undecided on what's going to happen. Let's face it, you spend your money on something, you want to know what you're buying, right? Well, right now, there's this little dilemma out there. We just don't know what we're buying. Are we buying what kind of government are we buying? We don't know who's going to win. The stimulus, that seems kind of silly to me because we all know it's going to pass, but the market is waiting to get the little green light. And COVID, well, COVID is just a horrible thing, and the market's doing its best to work through that, just as we the people are too. So bottom line, let's be very, very careful. Oh yeah, and to boot, if that's not enough, we have earnings, right? So make sure you check your charts, make sure the earnings are there. All right, what I'd like to do first here, let's just look at the SPY. We're going to look at the Qs. We're going to look at the charts I'm in, and then we'll look at some trade ideas going forward here. So looking at the SPY, this is the daily chart. This red line down here is my 200 period moving average. The dotted line is what we call the dotted deuce. The blue line here is the 50 period moving average. And the green and red dots, that's our trend indicator. Oh, I've been asked a lot lately, what is this blue line across here? And that's the 150 linear regression line is what it is. I just want a straight line, and I just want to see how volume might move with that line. That's all it is. Okay, so we are underneath the T-line, price is. T-line still above the trend indicator. Price is not looking very good here. This morning, it looks like we're opening up very near yesterday's low. We've got the 50 period moving average down here, about $339, $340. That could very easily get tagged, real easy. If we take a look at the 3-bar chart, and I do like to use a 3-bar chart, you can see that we actually pierced the 50 period moving average yesterday and actually closed below it. We also have what we could, from a chart pattern view, what we could have here is the dreaded H pattern setting up. Now we need more follow through to actually make that a confirmed dreaded H pattern. But this is sort of the beginning of it right now. And if the dreaded H pattern actually works, more sellers, excuse me, we see some weakness down here. We could easily see that 200 period, the dotted deuce down here tag. And just for fun, I'm going to come down here and just put a line, split the middle of those two, go back to the daily, and you see where that might put us, below the 50 daily, down in here. Now that's only based on weakness. I think all we need is a little bit of good news, and I suspect the most The most likely good news would be that the our fearless leaders in this U.S. have come to some agreement on the stimulus, and I think that's the soonest or our best chance in the very near term of possible good news to turn us up here. Taking a look at the Qs, a very similar chart. Here's the daily. Price is below the T-line. We're sitting right at the trend indicator. The 50-period moving average is sitting right here. You've got the 3-bar chart. You can see that clear downtrend that we've got. Pierce through that 50-period moving average. And here's the dotted deuces down here. Let's just split the middle, go back to the daily, and you see where that might put us for possibility if we start seeing weakness here. So a little caution. Overall, I am still bullish on the market. Overall, the market continues to hold itself up here. We haven't really broken down. We haven't broken any major support yet at all. Just the price action is giving us a little trouble. All right, real quick here. I'm still in NIO. I cannot say whether I'm going to hold NIO through the weekend. Honestly, I'm probably leaning more toward cash this weekend. So in a perfect world, between today and the early part of tomorrow, I would really like NIO to pop up. And if it does, then I'll pull those profits off. I really just don't have a big interest in holding over the weekend. Another position I'm holding is CGC. Same story with that one. I really don't have an interest in holding over the weekend. So we did raise our stop yesterday. We raised the stop up a little bit. Here, and right down here I wrote, CGC December calls, 15 strikes, 1740 stop. Our cost is $3.95 on it. We have raised the stop up from that 1740 here, and that's looking pretty good right now. And I am still holding Ford. Here's Ford. We bought the January call, 7 strike, 755 cost. Whoops, 755 stop. $1.10 cost. And if that starts to move up a little bit today, which it looks like it is, then we'll raise the stop on that as well. All right, let's take a look at today's trade ideas. Let me bring them up here real quick. All right, first one I have, and the order doesn't matter. Doesn't mean that one's any better than the other. Looking at AA. AA has been in a nice trend here, below the 200. Nice trend. We rallied up, and now we've pulled back. We've tested the dotted deuce here. Look how the dotted deuce kind of held us back right there. Finally punched through it, and now we're bouncing off of it. We're starting a little T-line trend back up. We're above the trend indicator. We're having, we're right here yesterday, finished right about that 50-period moving average. So we start to see a little follow through that'll put us over that 50-period moving average. I find some traders are concerned about the 50 and it tends to bother them. Then don't trade it. Trading is really, really simple. If the 50-period moving average bothers you, don't trade it until it breaks out over the 50-period moving average right here. Now, if the 50-period moving average doesn't bother you, and we end up with an inside day today, at some point today, and maybe at the close, well, if that 50 doesn't bother you and you trade the chart pattern and price action a little bit more, then maybe that inside day would be a terrific entry area for you. And I'm very serious about this. Create some rules that work for you. Sometimes it takes trial and error. So the key there is don't lose all your money through your trial and error. I've got, on another conversation, I can tell you how to not do that I can tell you 100% how to not do that on another conversation till you learn what works for you. Because There's different traders out there that can look at a chart and trade it a little different. One might have a concern of the 50 period moving average. One might not, but they both make the same amount of money. They just maybe enter the trade a little different, manage the trade a little different, especially at the beginning part. And if you're a trader that you just shiver in your boots if we're under the 50 like this, well, don't trade it. Don't make yourself do something that you do not want to do, okay? Don't let FOMO get the best of you, fear of missing out. Don't be fearful. Man, this stock could be way up here. So we don't have to be in a hurry to get in. Another trade I'm looking at, and the whole oil thing, I'm not sure oil is ready to go up yet. In fact, I'm pretty confident it's not going up. Well, now that I've said that, probably later today it moves up. But what I'm doing is I'm really watching some of the oil companies because I think at some point this oil is going to start going up. And every now and then I run across a chart that looks like it's shaping up fairly well. And here's Baker Hughes, ticker symbol BKR. We're down, we're high, we're down lower, we're high, we're up higher, and now we're starting to move up. We tested the 50 period moving average yesterday on a very nice candle, and the previous day was a very nice candle. In fact, the whole several days has created a pretty nice chart pattern. So here's our bullishness up, and here is consolidation to the right, and now we're breaking out. So there is a possibility that this runs up a little higher. And if you were in the market to maybe make 10%, 12%, this might be a trade. Is it going to go higher? I don't know about that just yet. But it is in a position to me, where it looks like to me, that it runs up. We could see a 10, 12% move in it. We just have to watch that entry and manage the chart. So be very cautious on it. Earnings were yesterday, I believe, so we're past earnings on it. So we'll keep an eye on that one. WRB is another one that I'm liking here and considering. WRB has had a nice long consolidation here since June, and it just seems to be getting tighter and tighter and tighter. It's now over the dotted deuce in the 200 period moving average. You can see over here it's got the possibility of 79.50 to test these recent highs of back in February. So I'm kind of keeping my eye on that one. Let's look at the weekly chart, and you can see that weekly chart has now broken out over the 50 period moving average. Not a bad candle there, not bad at all. You can clearly see the resistance in here. We break out of that resistance, then I think we may be looking at 79.50 up here, or in that 79 area anyway. So WRB, will be adding it to our watch list. Another stock that we're no stranger to it, the trading room members are no stranger to it, is HUN. I actually was in this the other day. I didn't like the way it was acting, and it was before the weekend, last weekend. So to limit risk, I got out of it. We've got a pair of Dojis over here now, yesterday and the previous day. Nice little bullish engulf over a Doji, up and back. We're holding that bullish engulf. This chart is starting to look pretty tasty again. So I'm going to have to keep an eye on that. I can see it's this morning, at least at the moment anyway, and this is about an hour and a half before the market opens. Looks like we're gapping up a little bit, so I may have to be back in HUN on this rally, pullback, dojis, and a positive move up. Another chart I'm looking at that seems to be setting up anyway is SO. Pre-market, it's down just a smidgen. We're right here down at the lower end of yesterday's candle. The chart pattern, excuse me, chart pattern's up, we're down, and now we're starting to move up again. What we're going to need to see on this is support here and then some follow through. So we start to see that breakout, maybe positive trading in between here, might make an entry, and then that may be a trade there. Excuse me, I hope it wasn't on the mic. I had to pause it. One of those little morning sneezes. Okay, so again, SO still looking great. It does look like it's opening up a little bit weak, but it may, buyers may just suck that up and start bringing it back up. I do like the chart pattern. Everything is looking good on this to move a little bit higher. So we'll just monitor that for the next few days, see what happens. How about some Disney? So what I'm liking about Disney is the overall chart. We're trending up, okay? We bounced off the 200 period moving average here. We actually gapped up over the 50 period moving average, and we pulled back a little bit and put a Morningstar type signal in right in here. So what I'm looking for is a little bit of follow through, over yesterday's candle. And, let's put this in here because I could even see an inside day on this would be a nice entry. I think our risk would be pretty small using these lows as a stop. So even if we put an entry in the high side, we're looking under 2% for a stop. And the reward up here on Disney could be up here testing these tops or higher. I mean, we all know Disney can go higher. Here's the weekly chart, and you can see Disney in that 153 range. Wow, this is the first I've looked at the weekly chart, and here's that 50 period moving average, and you can see that we're over it here. I think the weekly chart is looking pretty good. I'm going to go look at a naked chart on this one. Here's the naked chart. Let's go to the weekly. There we go. And I'm actually going to go here. Clean. Why does that look different than the other chart? Hang on here. What's going on? Huh. So here's the week. Oh, okay. It's the same thing. I'm sorry. I'm just morning time. Haven't had enough coffee yet. So here we are. And let's put up that 50 period moving average so you can take a look at it. There we are. There we go. Okay. I'm going to get rid of this line right here. There we go. Now let's do some drawing on this. Look how we've gone up, back, continuing to make higher lows, up, back, continuing to make a higher lows. We took out that 50 period moving average, and now a little bit of testing, and now we're starting to come up. So let's straighten this out just a little bit. Let's take this line and go all the way up here. Take this line, go down to that low. See how that's starting to work? So we continue to make higher lows. We also seem to be making higher highs. We're working on it right now. So I'll have to keep Disney on that watch list. I kind of like it on the weekly chart above the 50 period moving average and above 125.35. So let's keep an eye on Disney. The last one I have is KSS, little Coles here. Let's come back over to this chart. Actually, this chart. That's what we've been looking at. And the daily chart. Okay, so here's Coles. We've been moving sideways for the most part, really not going anywhere. It's got a ever so slight rise to it, very slight, but it is a rise. Nice little fight between the buyers and sellers here. And the buyers, it appears based on the candlesticks, the buyers took clear control. We rallied up, your normal everyday profit-taking selling back down to the trend line. Bullish Hiromi, follow through. We're up over the 50 period moving average and the dotted deuce. We've got a rounded bottom breakout here. This is one of my favorite strategies to trade. So right now, I would be looking at coals heading up toward the 200-day moving average. Earnings on the 17th, so there's still a couple of weeks away before that comes into play. So we'll keep an eye on coals. I'll be looking for an inside day or something close to this candle and or the 50-period moving average for a buy. And then I'll be looking for a target direction of about $25 up here. Okay, that's the trade ideas. I want to thank everybody again for being here. Remember to subscribe, give us a thumbs up, check us out on Twitter. Appreciate all your support. You guys take care, and we'll see you in the trading room.